Hey everybody, and welcome back to Crypto Atlas. In today's video, we're to keep this actually pretty brief. It's pretty calm today, and so I don't want to be overwhelming you guys with a bunch of stuff that I just don't really has a lot of added value. So we're just going to kind of touch on the key elements and hopefully enjoy this. If you're new to the channel, you want to check out some of my other videos and see how I do a lot of those, you're more than welcome to. Feel free to subscribe, or if you just like this content in this channel from the video you're watching, definitely feel free to subscribe. We're trying to get to 50 likes, guys, so if you have not yet done so and you can hit that, definitely would help. Bell notification so you know when to go live. And without further ado, let's go ahead and get right into this. We're talking about Bitcoin and we're talking about Orchid today, and just a couple articles. So first off, a key highlight: why Bitcoin price just lost 16,000 in a typical weekend drop. Well, it was above where its current point is right now. So right now it's at 16,038 according to the btcusd.agdr.trade website, or 16,056 if you take a look over here on the trading view side. You can see that there is a bit of red action that's taking place on that candle for the daily that's just formed. Previous day as of a red, but we had several green candles, so we're seeing some pullbacks that are occurring, which is expected, but we're starting to go into that sideways consolidated space. So this article just kind of talks about some key elements regarding this drop. The price of Bitcoin has seen volatility within the past 12 hours. The top cryptocurrency fell from $16,400 to $15,750 within hours, rejecting sharply after surpassing the $16,000 resistance earlier this week. As of November 14th, the 20-day moving average Bitcoin on the daily chart is at $14,600. In the near term, if a pullback occurs, the $14,600 level remains a favorable area for buyers. I wouldn't say we're going to nuke, but at the point clever proprietary entities with a lot of capital and intellectual property of a certain nature realize that the $16,500 asks have been resting there for a long time and don't appear to be lifting with price very close to there. Meaning, if an algorithm exists that can profitably dump price and flush longs, the conditions for its use are possibly being engineered in a manner so as to extract the maximum amount of profit. Long story short, as soon as it's profitable to hunt longs, your stops are getting taken. So 16,500 seems to be a new formation level that a lot of people are setting up with these buy positions or sell positions, and some of them are reportedly being considered to be fake outs. So that people take a look and they see that there's levels up there and they think, oh, because it's going to go up, let's try and sell it off now. And then it's actually the inverse. It's a lot of psychological plays, and you start looking at too many of these what if things and it starts become a conspiracy theory. And I'm just trying to look at the simple facts and try and infer as best of a judgment call as what we can of what is more likely to happen than not. So 16,500, that's a key point. Staying above 16,000, that's a key point. Otherwise, you can see retracements, and I'll talk about that in a minute here on the chart. Inflation gains, Bitcoin competes with fiat on value but lacks volume. Take a look down here. Fiat currency is weakening. Well, we all know that 2020, there's a lot of inflation that's taken place, not just in the United States, but around the world. Despite being the most gold-backed fiat currency in the global market, the Russian ruble now has a lower monetary base than Bitcoin. With the ruble losing further ground to the US dollar and Bitcoin jumping to the $16,000 mark, one Bitcoin now equals 1.2 million rubles. Up next for Bitcoin in its assault of major currencies is the Canadian dollar. Based on its current circulating supply, a move above $18,000 for Bitcoin would see it overtaking the Canadian dollar. So $16,000, we need to make about a $2,000 gain for it to then move from where it's currently at above Russia to further above Canada as well. But one thing that they're not specifying here is that you don't necessarily need the price of Bitcoin to go to $18,000, because if Canada's naturally having a degrading value, right? If we immediately go to $18,000, okay, then yeah, that makes sense. But as time goes on, the value of the Canadian dollar is going to shift and continue to go down unless the US ends up recovering and strengthening its dollar by comparison. But we see a lot of things that's going on with the pandemic, and the Federal Reserve doesn't really have any plans right now to stop printing money. So I think it's more likely that we see another continuation of hyperinflation from the Federal Reserve with the United States. But we'll have to see how things play out. So as of just the way that things are at this exact moment, Bitcoin needs to go above $18,000. As previously reported, Bitcoin is already at all-time highs against 7 national currencies, including those of Brazil, Argentina, and Turkey. Rising inflation, exacerbated by economic stagnation occasioned by COVID-19, has negatively impacted several fiat currencies. As you guys can take a look on the chart here, you can see Bitcoin being listed at the 15K, but we're actually at 16K now. And then you've also got silver being listed up above. You've got that's funny. They didn't even spell United States right. Oh, wait. Yeah. United Kingdom, unaided. The unaided states. Oh, God. Who wrote this stuff, guys? Come on. Spell the states. United States. Spell it right, please. Spell Iran right, at least. There's 4 letters there. Okay. And then moving on to the next little bit of news here. Let's go ahead and close that out. Stealth phase over. Why Wall Street FOMO will make $20,000 Bitcoin look cheap. Wall Street is not here yet. Remember 2017? That historic Bitcoin price rally was largely driven by retail traders, the average Joe, who were anticipating a Wall Street stampede alongside the frenzy of new tokens minted via initial coin offerings. So as you have it currently, you have some major hedge fund managers that have talked about this. You've got PayPal, which allows you to be able to purchase it now through them as well. And that gives a whole wider market of people that could potentially access this. But Wall Street itself is not really coming into play that heavy with this. Some people might dabble in it a little bit, but we're not seeing a wide field of adoption in relationship to Wall Street. So if Wall Street really decides to come in on this, then we're talking about a big game changer. And, you know, one of those is going to be the ETFs. No, not ETFs. I forgot what it's called. They talked about it here with the CME. Hopefully, Bitcoin futures. No. Anyways, I forgot what it was, guys. I'm a little bit tired too on top of everything else. I've been doing a lot of work. Institutions aren't in Bitcoin right now. It's been a retail phenomenon for the last decade, so Wall Street talks about it. They're aware of Bitcoin, but they're not really in it from our perspective, but it's starting to happen. So like I said, it's just starting to get dabbled in a little bit, but not fully there. Bitcoin is better at being gold than gold. Gold is up just 23% in 2020 during a year of global economic upheaval, which is when the safe haven metal was supposed to shine, pun intended. But Bitcoin, or digital gold, has been stealing the show by gaining 125% year to date and up by almost 300% from its coronavirus crash lows in March. What's more, BTC's market cap is just 2.36% of gold's, which some long-term investors see as the best asymmetric risk-reward ratio bet in history. Keep that in mind. The room for growth to just get to gold's level is massive. It is very, very significant. And as we move further into a digital era, the people that are big proponents for gold will start to go down. And they're not going to go away. You know, even younger generations will still have an interest in gold. And having some gold, yeah, it's good to have something like that, especially if you want to diversify your portfolio. Bitcoin is here. It's making waves, and it is showing very strong evidence. It is the future, and it's not going anywhere. Okay, so now that off to the side, let's go ahead and take a look over at Bitcoin on the charts, and then we'll talk a little bit about what's going on with Orchid. So Bitcoin on the charts had a bounce off that took place off this high level of resistance on the daily. And it just briefly passed through, but it closed out down below. The next day, we saw a significant drop take place, a pullback up, and then the daily close. It's still in the red position as of the moment, but we're seeing it trying to fight to get a little bit of recovery. In fact, over here you can see on the BTC USD, which I've got on my separate monitor, that there is a bit of green action. There's a lot going on back and forth. The drop did take place, but the fact that it's now above 16,000 and it's fighting tooth and nail to try and maintain that $16,000 mark. If it can maintain itself for long enough, then the hope is it's going to have a further continuation on. Some people are speculating that a consolidated phase right now is not good at all, and that's likely to cause it to drop because people will start losing faith in that momentum that we've been looking for, trying to hit 20K, and skeptics are going to start thinking a huge sell-off is going to take place, and they want to bounce out before it hits them hard in the pockets too. This could have a further continuation down. The expectancy is a drop at the 21 EMA. So as of the new daily here, 21 EMA position would be approximately $14,821. So if it goes down to that level, expect a likely bounce off and a fight taking place there, trying to have a further continuation up. As it is right now, we are having some consolidated space, but it is still maintaining itself higher. If this drops down further, it would just further validate the fact that we're going into a consolidated space. So I realistically would be right around inside of this range right here. And as it is, the formation of the bottom, as you guys can see, has been having a steady climb up though. So we've been having a new higher low. And right now it really needs to try and break above this key area before it's able to have a further gain up to what's going to be a key level, $17,200, as I've talked about previously in my videos. So back in 2018, we had a level that took place and it was rejected and had a further pullback down. So $17,200 roughly is where you want to keep an eye on. But most imminently, to get above this level of resistance, it's going to be at approximately $16,467. If we can get above $16,500, especially with all those sell orders that's being talked about, then we're looking pretty good for another testing going towards 17K, another 1K towards that big goal, right? Now, the fun and excitement is going to be once we pass 20K. A lot of people are going to be wondering what's going to happen. And I think a lot of people are expecting huge sell-offs to take place. So I would not be surprised, personally, if it goes to 20K and has a very big drop very quickly. But it might recover very quickly, too. But if it hits 20K and nobody really sells and it just keeps moving forward, I would be pleasantly surprised, pleasantly shocked. I'd be happy. I mean, just keep going. Keep making more money, please. But I think a likely sell-off is going to take place. Okay, so especially if you got people from a couple years ago that just held on and they've been waiting for it to go back so they can try and break even, they might be like, okay, I feel it's going to drop, so I'd rather just call it now and get my money back, which is funny because if you bought it at 20K and it hits 20K and you sell it because of inflation, you technically lost money anyways. Why do you want your money back again? Why not just keep it in Bitcoin? Somebody explain this to me, baby. All right, let's go. Over here to Orchid. And again, guys, if you're new to the channel, enjoying yourselves, please don't forget to subscribe. Don't forget to turn on the bell notifications if you guys are new or old so that you get alerted when we make these new videos. And if you guys can, hit that thumbs up like button. We have this descending wedge pattern going on with Orchid, and it is starting to broaden out even further. The problem with that is because of this consolidated space. So as you guys can actually see right here, we can extend that out, sure. And there's not much of a variable difference because there's not much space down below this point. In fact, as we start to widen this out, it rejects the idea more and more of a 3 identification for the pattern and now confirms a 2-point pattern, which isn't as strong. It's not as validated, right? And so because of that, we're in a very sticky situation. And as you guys can see from the Fibonacci retracement, we're in a consolidated space. I don't even need to draw a little box like what we have here. It's literally in this bottom portion of the Fibonacci retracement. And we've been in here since October 14th. So it's been a month, a full month that we've been inside that bottom section. Right now we're resting in the median zone. So if we can break above the formation of this resistance, which is a very weak form of resistance in my opinion, there just needs to be an increase in this volume. You know, we've been seeing this progressively well, not progressively. We just had some high volume points that created these. Otherwise, we would have had this long consolidated space running all the way across the bottom there. So realistically, if somebody comes in like at this point here or this point here and they really want to cause a splash, that could really cause some further momentum going on. What seems to be likely happening is a lot of people that are now getting released their tokens of what they had purchased previously when Orchid was first starting. Some of them are just trying to take losses and get money back. Maybe they want to allocate it over to Bitcoin. And they're just saying, you know, I'm willing to take some loss on this, but I believe more in the security of Bitcoin, or they found another coin they want to invest in. I mean, there's so many different reasons why people move their money around. But what we are seeing is that as action starts to move up, somebody is selling off tremendously, and it happens over and over again. And oh, that's interesting. I didn't even know. I had a little line right there. Little tree, little happy tree. That was a not so happy tree though. And yeah, so we got to break above this 21 EMA, guys. I've talked about it over and over and over and over again, and I'm staying to my fundamentals, sticking to my truth, to my word. Broke above. Okay, great. We need 3 days. It's Orchid. Not 2 days. Let's substantiate it. 3 days. We had 1 day close above. Cool. 2 days. Good. Let's go, baby. And the next day, it went red. So I'm still bearish. Green broke above, great. Next day close, down below. Green trying to go above that 21 EMA, not even reaching it yet right now. Is it likely to pass above? We've been seeing back and forth, so I wouldn't be surprised if this breaks above again. Seems like a lot of back and forth action that's taking place. And this is a new candle. So if this has a further continuation up into the levels, closes out, great. We need 2-3 more days. And the longer that we do that, again, it's just going to keep extending out that wedge more and more and more. And this is a reversal pattern. So staying above the level of resistance is a key element. But going sideways, start to form a symmetrical triangle, and that consolidated phase leaves a lot of uncertainty. So we've been seeing some big correlation between Ethereum and with Bitcoin and movements that take place, and it has a dramatic impact, it seems, on Orchid with the upcoming Ethereum 2.0, which is likely to be expected in the next 2 weeks on December 1st. If everything continues on plan with all the people they're going to be doing their staking in that, I think that because this is an ERC20 token, this is listed on the major exchanges, this is like a top 100 coin on the coin market cap, right? Whether it drops just slightly down or it comes back in, it's in that 100 coin range. This could be huge. And then if you include in the fact that the Windows update is basically ready to go, that also looks like it's very promising and huge. Now, what would be amazing is imagine if they said, hey, not only are we doing a Windows update, but we're also doing the nano payment marketplace, and here's the official start for that thing too. So we're doing them at the same exact time. That would be amazing. That would be super, 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 super cool. But I don't think that's going to happen. I think the nano payment thing is going to be something that they will likely roll out next year. Don't quote me on it, but you know, anything is technically possible for this year, and this team seems pretty good at what they're doing. I'm just excited to see them at some point finally start expanding beyond just doing the VPN stuff. I like it. I think it's a cool little market space for sure, but we need to expand out to a broader market for sure. As it is right now though, guys, my verdict on this, I'm still bearish. I'm still thinking that the price is going to go further down, and I don't want that to happen. I own in this. I believe in it and its project in the future, but the signs keep indicating sideways action, formations further down that take place. See a little bit of a climb up here, and further drop off. It needs to go above 21 EMA. It needs to establish itself for 3 days consecutively, and then I think we're actually on a legitimate rally. There might be a big pump that takes place, right? But is there going to be a dump right afterwards? And what I'm talking about right now is more realistic in the security of mindset, something that you feel that shows signs of long-term growth, not just like a big roll gamble like, hey, I was right, it did massive 5,000% explosion gains. because I got really lucky, you know? So anyways, guys, it needs to go above 21 EMA. Those are the facts of where I stand. Until then, it still looks like it's going to go further down. So further rally, keep pushing it up. Cool. Get above. Good. Keep the momentum. Hold it down, guys. Hold down the fort. That's what needs to happen. These are just my opinions. I'm not a financial advisor. Hopefully you guys enjoyed this video. Again, it's a little bit shorter than normally on my other videos, but I thank you guys so much for being here, being a part of this channel. And once again, don't forget to subscribe, hit that like button. It really helps us out with the discoverability, and also turn the bell notification on so you know when we go live. Thank you guys, and I will see you in the next episode.